Good morning, everybody. Welcome to the ARMR Report. This is our morning meeting. Please join us in our virtual hedge fund conference room so we can get ourselves ready for the trading session. I'm going to share with you big picture stuff. We're going to go over algorithmic information. We're going to go over our research, right? We're going to talk about all these things that are driving the market. And at the end of the day, you're a portfolio manager on our desk. So you got to figure out how to take the information, make it your own, figure out your risk tolerance, your goals, and then build a portfolio that way. So let's jump into it real quick. And let's try to just order our thinking, make it simple. Number one, risk monitor has not changed. Risk monitor won't change. It's still red. The reason it can't change is we have 10 indexes we follow. We've expanded it to 10 from 7. And we apply our algorithms, which are probability algorithms, to tell us when to put capital into the market, when to take it out. We have our highest probability of success investing when all 10 are telling us the same thing. Okay, 7 out of 10 telling us the same thing. But honestly, it'll happen. All 10 will go risk on at the same time. That's our highest probability of putting money to work. The rest of the time, a little more dicey. Because of the financial crisis going on, it's blown apart small caps, Dow, value, momentum. None of those indexes are going to give us a risk-on opportunity anytime in the near future. So you will not see the risk monitor change. And yet, my portfolio, ARMR flagship portfolio, go look at the portfolio on our website, portfolio page. I show you what I own, where I bought it, what my stop is, what my target is. I drop it into the Slack room for you. I take a quick screenshot of it so you can see it right there under portfolio updates to make it easy. And you're going to see I added a lot of stocks to my portfolio yesterday. We did it first thing in the morning yesterday and had a huge up day. Why? Why did we do that? Coming into the day yesterday, I told you on yesterday's morning meeting, and we talked about it all day on the trading desk, the NASDAQ 100 is about to give us a risk-on buy signal. Let's take a look at the chart. There it is. It went green today. It went green yesterday. Okay? There's a double bottom holding above all the key moving averages. And if we close the week above every key moving average, it's clear to see money's flowing into big cap tech. We know it's flowing out of the Dow. That looks god awful. We really know it's flowing out of small caps. That's imploding. These things are trading below key moving averages. But we look at the NASDAQ 100 and it's flowing in. How about the NASDAQ equally weighted? Same story. That's equally weighted. That's not even just, the big FANG stocks. That's all of them. On a week, equal weighted. Risk on here, rallied up, pulled back, tested to support, risk on again. We also had the swing strategy for the S&P give us a risk on. I didn't think it was going to do that. I was kind of shocked. At the end of the day, the S&P went positive right here. I'm surprised. The equally weighted S&P looks a lot worse. This is full of financial stocks that are getting wrecked, and it's equally weighted. The weighted index, which has more weight on the big cap tech stocks, showing more resilience. Qs is where it's at. Let's go talk about what's happening. So risk monitor still red. That won't change. It means any investing I'm doing right now is more dangerous. It means my stops are tight. There's no wiggle room. An asset takes out the low of yesterday, it's gone out of the portfolio immediately. Okay? We structured a portfolio where we have an allocation to the NASDAQ 100. We had a bigger allocation during the day yesterday. We booked some profits at the end of the day, brought it into a normal size and took some gains off the table. We have an allocation to ARMR Power Play names. These are aggressive growth, innovative names. Now, I give you a ballpark of how I'm structuring my portfolio as a starting point for you to think on your own how much exposure you want. I'm putting 3% of my capital in each power play name. I intend to have 10 names and see if I can make money. That means 30% of my capital will be committed to ARMR Power Play names. I've got 9 positions on at the end of the day yesterday, so I'm almost done. So I've got power play names, which are aggressive growth, innovative names, and I've got an allocation to the NASDAQ 100. We debate putting money into Microsoft, Apple, Tesla, Google. I don't want to do that. If I don't think an asset can outperform the market by 2x, then I'd rather just own QLD, which is 2x. And so any capital that I would commit to those big names, I'm just committing to the Qs. Easy to hedge it. Makes it easier to hedge it. Less positions, less slippage. This is what I do in a defensive market where I'm trying to take my shots. Okay. So the 9 positions I have in there are power play names that I think have fundamentals that, let's just pretend, humor me for a minute. This is the beginning of a major upcycle in the market. These 9 stocks, the 10 that I eventually own, all of them go up off of this low for whatever reasons. We'll get into why in a minute. That could happen. And 6 to 9 to 12 months from now, I think these stocks have the potential to outperform the market by more than 2x. So that's what shows up in my portfolio. That's what you see on the spreadsheet. Do I think Apple, Google, Microsoft are good ideas? Yeah, they all look great. But the ones that are on my power play list, I think have that little extra juice of explosive growth. And that's how I want to invest. So risk monitor red. Algos for just the S&P and the NASDAQ 100, which weight big cap tech, green. Putting money in big cap tech, putting money in power play names. Why? Why are these names going up? These are the names that are most sensitive to what happens to treasuries, treasury bonds. Let's go look at TLT. We already have a position in TLT from down here, remember? Sorry, guys. Right? And while I've trimmed a little bit and booked a profit on the initial pop, we have a nice size position in treasuries. And if TLT can get above the 200-day moving average and close above the high of this rectangle, I'll have a bigger treasury position on. Okay? Yes, love. Sounds good. Love you. All right. So I've got a nice position size on treasuries that I intend to increase dramatically if we break out above the downward trending 200-day and above this rectangle. So if you look at what's working, it's the assets that are most sensitive to quantitative easing. Okay? And that's how we've structured the ARMR portfolio. It's dangerous. We're hedging. We own things like VIX. We short the weakest indexes during the day and sometimes hold that overnight. I came in this morning and immediately put on short position on the small caps and the Dow. I did that because I'm looking at FRC and PACW. The 2 banks that are getting bailed out, really FRC that's getting bailed out, I am watching them like a hawk. All the good news bailout goose the stocks. If they then roll over and crater to new lows, that tells you something's wrong with the system. That will remind me of 2008, where there would be this 2-day rally off of hopes that the crisis is over, only to roll over and crater to new lows. So be very aware. Use stops. Make sure you have the right position sizes on. One thing that's smart to do when taking a position in these individual names, put on position and hold some back for weakness. Market comes down, they come down and test the stop, but hold above it, finish the position off. Now you've added close to the stop. Takes out the stop, your risk is minimal. Skyrockets from there, you've got a great position size on. Why is all this happening, and what's going to happen next week is the question. Well, it's pretty obvious why all this is happening. I shared with you in the Slack room right down there a chart of quantitative easing that's skyrocketed in the last couple of weeks. That's what drives the market. Let's don't make it any more confusing than that. The hard part is knowing what's going to happen next. But let me show you a chart of the top 3 central banks combined. There's a chart. So quantitative tightening, this is why we've been in a bear market, okay? Quantitative tightening kind of slowed down in here, and you got that rally in December, January, because you see there's a little quantitative easing, right? Then February, tighten until we get to the lows, and a banking crisis began. And as you can see in the last couple of weeks, quantitative easing, the central bank balance sheet has skyrocketed at an aggressive rate. That's why the stock market let me take that back. That's why treasury bonds look better, and parts of the stock market are attracting capital, and you're getting this bifurcated market. You don't want to own any index that's got financials in it, because we're in the midst of a financial crisis. But there's QE coming in like crazy. So put money to work. Where's all the money going? Big cap tech and innovative growth stocks, which, let's be honest, are already down 70 to 80% over the last 2 years. Roadblocks, trade desk, these types of things that we were adding to the portfolio. Let's just take a quick look at a couple of them, right? Let's look at Roadblocks. Okay. Roadblocks is this is one of my favorite names. Okay. Again, I keep talking about this every morning. You can go look at the research on why I think this is a juggernaut. And it's got nothing to do with the fact that 13 and under kids play Roblox, which is pretty cool. I played Roblox with my kids, and so I've understood how awesome the platform is. I've understood that my child, who's 9, can build his own game in Roblox, and other kids all around the world can play it. That's like mind-blowing to me, you know? I'm an Atari kid. You know? We played Frogger, and we thought we were like, you know, doing something amazing. Okay. Anyway, what's really important about this chart, and to help you understand the flow of capital right now, when the news came out that SVB blew up, this company announced that 5% of their cash was locked at SVB. The stock didn't even go down. Stock's making new highs. It's not as bad, obviously, as Roku. At what was it? 25%. 25% of Roku's cash was at SVB, and the stock barely went down. How's that possible? What was it? $500 million locked up there. Now they're getting access to it. The government's bailing them out, but the stock barely went down. What does that tell you? It tells you that these innovative growth stocks are totally bottoming out. I don't like Roku. Okay. But you all know what I think of For instance, Trade Desk. I think that's a huge story. The market is making it very simple right now, which it doesn't usually do. We have a banking crisis, which is forcing quantitative easing. And the stocks that perform best in QE is where we want to invest. NASDAQ 100, innovative growth stocks. We want to hedge with VIX and short indexes. That's how I do it, or puts, or however you want to do it. Indexes that are financial heavy. What could upset that apple cart? Powell speaking next week. Fed meeting. My hat tossed into the ring. Powell's going to increase 50 basis points. Why wouldn't he? The ECB just increased 50 basis points. I think it's very clear what central banks are doing. They're going to keep raising rates and talk about how they're going to attack inflation. And at the same time, behind the scenes, they're adding massive amounts of QE, so there's no financial crisis. The stock market is responding to QE and looking ahead 6 to 9 months, as it always does, and knows that we're close to peak interest rates. If that's true, then where do you invest? Long bonds, growth stocks. That's where you put money. Obviously, the Fed could screw it up next week. And it'll, we'll have to deal with that. I don't know what a screw up would be. Because I think 50 basis points, the market goes up. The ECB just did 50 basis points, the market blew out. I almost feel like if the Fed comes out and says, we're not raising rates, I almost think the financial stocks will just implode. I don't know what would happen to growth stocks. I guess they would go up dramatically because the treasuries would go through the roof. I don't know. But I don't think that's going to happen. I think there's no chance of that. I think the Fed's going to raise 50 basis points, explain that they have to get ahead of inflation, and explain that they're backstopping the banking system. I don't know if they can do both. I don't know if they can get ahead of inflation and backstop the banking system at the same time, but I think we're going to find out. Moving on to something that I just think is so much fun that I have to share it with you. I'm a Bitcoin owner. I have some Bitcoin in cold storage. I own BITO. Now, I went over this with you a few days ago. If BITO closes above the 200-day moving average, it breaks out of this pattern right here, which is somewhere around $15.17 on a weekly basis. Okay, it's been basing since last June, and it breaks out here right now. It's up 7% at 16.54, brother. What fun! This is so much fun. You know why it's so much fun? Because I've never owned Bitcoin, right? You guys know me. I think Bitcoin, forget it. I missed it all the way up, but I was right all the way down from the 60s, right? 60,000. And this is just for you, Chad. Ready? Tom Lee, you're just a year off, brother, because Bitcoin's going to be 100,000 by the end of this year. The most fun part about owning Bitcoin is that I get to go out there on Twitter and make totally baseless, absolutely ridiculous price target predictions. I mean, I think that comes with owning Bitcoin. You get to say absolutely stupid things that are just price targets pulled out of the sky. Kathy Wood does it. What the hell? I'll do it. Bitcoin, 250,000 in the next 8 months. Or the next 8 years. I don't know. I'll tell you, I'm getting more fun out of that than I am actually owning Bitcoin that's up 7% right now. Anyway, Bitcoin I've been, what do you mean cold? When you say cold storage so fast, I've been nibbling away and putting it, I have a little bit over here. I've been doing that, Fitz, for, but I like to keep it on the down low. I've just been nibbling away. Small position, Fitz, small position, right? My biggest exposure is right now in BITO. That's what I'm trading. But I do think everybody should have a little bit. Well, Fitz, it was a small position. It was a small position, Fitz, right? And just a little bit to hold on to. By the way, Fitz, I have gold coins in cold storage. I don't talk about that all the time, I got gold coins sitting in a vault, So, but suffice it to say, if Bitcoin closes above this key level by the end of the day today, I'm going to increase my exposure to whatever max is. I'm not going to tell you what that is because we're all different. So however much I think my biggest position size should be, I'm going to have it in Bitcoin. I don't know if it's 100,000 by the end of the year, 30,000 by the end of next month. I don't know. But this is my basic premise for Bitcoin. Now, these are my favorite reasons to own Bitcoin. Let me just say, before I tell you this, I have a stop. If it breaks down, I'll get out. None of this matters. What I'm saying right now won't matter. I'll get out. Okay. Now, having said that, this is what I want. This is what I like about Bitcoin. This is what I like about it now. Bitcoin was originally born out of the great financial crisis, 2008. People lost sight of that in the hysteria that drove it into the 60,000s. They've lost sight of that. It's going to replace the dollar. It's going to do all these. It's ridiculous. The purpose of Bitcoin is a store of value in times of financial strife. And everybody's remembering that again. Okay, number one. Number two, all those Silicon Valley guys that lost a whole bunch of money, maybe they're broke, except for the Bitcoin they have, maybe a necklace around their neck. That has value for all of them. Okay. All of the shit coins that came out are gone. The blow up of FTX is the greatest thing that could have ever happened to Bitcoin. Okay. It's over. There's probably only it's over. I'm sure when Bitcoin's back to 50,000, a whole nother level will begin. But right now it's over. You can own Bitcoin or Ether. I just want Bitcoin. I don't even want a cryptocurrency that facilitates trading and buying. I don't care about another currency. If Bitcoin begins to act like gold and silver, that's when I want it. It's a store of value to protect assets. If that's the case, that's when I want it. I love the fact that all of the Bitcoin banks have gone bust. The on-off ramps. That's great. You see, because as an on-off ramp, if you're using Bitcoin to pay for something, that just creates a flow of Bitcoin to be dumped on the market. You don't know who's getting the Bitcoin. They're not holders. They're not buyers. They're not investors. They're using it to transact. I don't think anyone's using it to transact now. I think people are just using it to hoard. These are all the reasons why I like Bitcoin now. Right next to my gold, right next to my silver, as an allocation in my portfolio. So I think I'll leave it on that. I'll leave it at that. All right. I just think it's right to focus a little bit there. All right. I got to get to our live desk, but let me just wrap up with one quick thought. All right. Our old friend cannabis, MSOS. A tree fell in the proverbial cannabis forest yesterday and nobody heard it. And this is why I'm getting interested again. And I've just just dabble a little bit. Just put a little capital to work here. Nothing that's going to cause a problem, but something where I'm planting the seeds. Enjoy the pun, okay? Janet Yellen, head of the U.S. Treasury, made a statement, a comment. I don't even know why she said it or why she bothered, but they're working with the banking community to start banking cannabis companies. In the past, I don't know, what do you think MSOS would have been up that day? 15%, at least 30% maybe? You've got Biden administration, Merrick Garland, the U.S. Justice Department, Janet Yellen, all of them are talking about initiatives to help the cannabis industry. I mean, and nobody cares. The stocks were up like 4% on the news and then sold off at the end of the day. There's no hot money left. There's no money left at all in Canada. Nobody cares. It's time to pack a bowl. That's all. It's time to pack a bowl. I'm not talking about smoking a whole bag, maybe just a J. That's what I'm talking about. Just a little bit. At some point in here, there's going to be an announcement of major change. And these stocks are going to go up multiples. And I'm going to have a piece on. And when it goes like this, I'll probably triple it, quadruple it. I just have a small piece on. But that lack of reaction yesterday told me everything I need to know at this stage. And let's don't forget, in case you Canadians are wondering if I'm going to buy a Canadian stock, there's just one Canadian company I'm willing to own, and that's Organigram. Trading at 65 cents. The thing's cash flow positive. They're the only Canadian company that figured out how to make money in cannabis. So a little bit of that. All right, guys, I got to get out of here and get this live desk going. I appreciate your time this morning. I hope you all have a great trading session, and I'll see ARMR Insiders on the live desk at 9:25. Take care, everybody. Looks like the market's coming back just a little bit here. That's a good thing. All right, I'll see you all in a bit.